6:06 a.m., 9/27/2011. And we're gathered here in pre-market, okay? And pre-market's been open an hour and 7 minutes. And so far, from the closing price here, we got about an $8, well, here it is, gap open list right here. 852 on Priceline, 785 on the Google, 553. That's that Apple trade that we were in yesterday. And here comes ISRG clocking in there right along with BIDU. Here it is. Wynn, wow. All of these stocks here. The bull, look at that bull. Now, MMTs on the opening gap, if you see that bull have an immediate reversal, plan A is, if you see an immediate reversal, slide that bid. You come down, you can come back up and test, but then again, you would have two teeny bar reversals, descending value, and or two teeny ascending value, price action. This way, that's going to be how you verify your entries. And what we're going to be looking at is on the positive ratio open is how much of that initial opening print is the bear going to buy the cover, or is the bull going to come right in and sell into it? That would be verified by the opening 3-minute bar dropping two teeny negative value. Then you would drop immediately again, and the previous low to the, so you got that high price action, but the previous low bar, you don't go any higher. And that the diamonds are closing in your application down on those lows. And you always want to see the body of the candle print either above the diamond in value and or sell through it. So you want the body, okay? So it could be like, you know, 3 teenies. Take a look at all of your positive ratios and look for people who would sell into the opening bell, and or the bears would come in and say, oh man, I got to get out of the way, because remember when we called the lower end of the market down there at 1114 on the S&P, it didn't want to break. And we waited it because last week's reversal action, I believe, was 105 points. And so now with the volatility counter rally, the VIX still remains at high levels. That's the fear indicator for the S&P 500. And the VXN for the Nasdaq 100, and there's a few others, but they still remain at high levels. And what does it mean? People are paying more money for their positions. At the end of the day, that's what it means. So, short the top ratio gap. If you see slide that bid right away, and they start to do what they did yesterday, because yesterday they took these gaps, but then on the opening bell, you could see where they had dropped right away. Today, we're staying elevated in the pre-market opening gap from the close on all of our names that we trade. You got Wynn. We have an MMT that's always looking on that one. It likes to pull back. Okay, so if stocks are going to be strong today, if they do stay elevated in your platform, let's say they're up there between 85 and 100 for a half an hour, that would mean that the market was very strong and that the intraday consolidations, weighted price with the buyers and the sellers now, is that at times you'll know they're there and at times they're not, and how prices drift lower. Those are always very good moves to take, and they happen, usually they can happen during the lunch hour or after the first hourly tape when you get into that 30-minute price action at that time, MMT. So going into an hour and a half, that opening bell is where you'll see exactly where the entries and the exits have been defined between the buyer and the seller. Gap open up, Nasdaq comp, the gap open up qualifies at 1.00 ratio higher, Travel Zoo is down here, 1.03 and higher. So you got a longer list today with the upside volatility reversal. What we're going to be looking for in the S&P 500 is that when we get up to those levels now, I think Ken Flagg has it. I don't know what it might be again. Yeah, you're going to have to get through that 1186. That's the upper end for right now. If we go up to the upper end of the S&P and all of a sudden, bam, there's a lot of electronic orders out to sell at certain areas within the price action structure, you would be on high alert for that, MMT. And you'd be ready for that very quick change between the buyer and the seller at the weighted price. One of them are going to get stronger and one of them are always going to get weaker. So monitor the strength of the pullbacks from their original gap open up. If they pull back, let's say within the volatility, Google likes to pull back $4 intraday a lot of times. The calls, the puts, we're going to be monitoring them. I'm going to go off of the video. We have 14 minutes to the opening bell, but I can tell you, MMTs, look for that initial high up there and a very quick drop, though. That would be one of your verifier and qualifiers, is that all of a sudden it hits it, but then bam, the IR goes from 96 down to something like 25. That would mean that that was getting very weak at that price between the buyer and the seller, and you would want to start taking positions accordingly.